Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be giving you an insight into the 60-day cycle, a topic I've covered many times, but I've skimmed over because it is a complicated little topic. However, it gives us a very good detailed insight, especially now that we're coming to the end of the bear market. We need to know exactly where we are, where we're going in the next few days, weeks and months. Please make sure you watch to the end, as I'm going to give you my view about the Bitcoin miners. Also, to give you a polite reminder that please remember every one of my videos is for educational purposes. You must do your wider research and do your due diligence before you make any investment decisions. We are in a very volatile space called the crypto space, and you really need to be making sure that the decisions you make you're going to be happy with. So with that out of the way, drop everything, make yourself a cup of tea, sit yourself down, get your eyes on the screen for the most important video this month, and let's get cracking. But before we start, let's open up the Bitcoin vault and get in the mood for Bitcoin. Okay, so the title of the video is Getting Ready for the Bull Market, which is about to start. And the question is, when and how will it start? What we need to do is cover the 60-day cycle to give you some sort of an insight into exactly what the market is doing currently. Not many people are aware of the 60-day cycle that Bitcoin has. So what the 60-day cycle of Bitcoin is that you have a 60-day period. The title of this video is all about getting ready for the bull market run, which is about to begin. And the question is, when will it begin? So we need to look at the 60-day cycle to give us a ballpark figure of when it's about to start. And that's based on these 60-day cycles. So if I give you an example of how these cycles work, the current cycle started here. So each cycle goes from a low to the next low. And we have a midpoint, which is the 30 days. So for instance, the current cycle started here because that was the low after the previous high over here at 25,000. When we came down here, this 60-day cycle started here. So obviously this green candle was the low after this rundown that we had. And if you measure from this point here, the next 60-day cycle low should be on the 6th of November, which is next Sunday, not this Sunday coming, but the next Sunday after. So if we mark that here, you'll see that the market is now making its way down to this level here. Now each 60-day cycle isn't an exact 60-day, it's a ballpark figure, so it could be 5 or 6 or 7 days either side of the 60 days. So we're really aiming for this region here for the Bitcoin market to top out and for the start of the next 60-day cycle from here. Now what you get in each of the 60-day cycles is a midpoint, which is obviously at 30 days. So if we mark a midpoint between these two cycles, then it'll make it very easy for you to understand when I talk about a left translated cycle and a right translated cycle. So let's say the 60-day cycle actually bottoms out on the 6th of November. So we take the 60 days from here to the 6th of November, and our 30 days comes to the 7th of October, which is obviously gone. But it's very important to know the 30 days, and I'm going to mark that up now, so you'll easily understand exactly what I mean, and you'll be able to actually have a very important insight into any asset in any market. So what we have now is a 60-day cycle with a midpoint here. Now, as you can see, the midpoint was going to be on the 7th of October, but we seem to have topped out at this point here in the cycle. Now, the reason why that's very important is that when a market tops out before the 30 days, that's what we call a left translated cycle. And if it topped out, let's say here, after the 30 days, anywhere around here, then that would be called a right translated cycle. And the reason why that's important is that it gives you clues as to what this cycle is about to do. And the reason why this was very dangerous, that we actually topped out well before the 30 days. And this is one of the reasons why I became a little bit worried and concerned that we may well this time break the 17,500 low that we had over here. because it took only 6 days for the market to top out in this cycle here, the 60-day cycle, that means that it's got a lot more days in this cycle to come back down here. So it's basically a time period, and if the cycle tops out well before the 30 days, that means that it's giving us a clue that the market may well go much, much lower, and we need to adjust our thinking accordingly. However, as you can see, we came to a bottom over here, well within the 30 days, and started to have this rally up here. So the strength of this consolidation over here, despite the market topping out well before the 30-day period, gave us a clue that it is becoming increasingly unlikely, a lower degree of probability that we'll break this 17,500 over here. And you normally get left translated cycles, i.e. topping out before the 30-day period during bear markets, because obviously bear markets, they spend more time going down than they go up. And the reverse is true when the bull market starts. So when we get into the next few cycles, you'll see that in the midpoint of the cycle, what we'll have is we'll spend a lot more time going up past the 30-day cycle, which will give us a clue that these are now right translated cycles, and we're going to spend much less time going down. And then we'll be able to see the turnaround and the reversals to go back up for the next cycle top. So I hope that's not been too complicated. The reason why this is the current cycle, if we work from this point before, what happened, if you take it from this bottom point here towards the 60-day cycle, you'll see that we bottomed out here, and that was 56 days prior to this. So this cycle was 56 days and not 60 days. Like I say, the 60-day cycle, you have to be flexible with given 5 or 6 days either side of the 60. So they can top out at 54 days or 66 days or 67 days. And you can see in this 60-day cycle, the 30 days started from here on the 13th of July to the 12th of August here. And if we mark that cycle up on the 12th of August here, you can see that this was a right translated cycle, i.e. after the 30 days we topped out and we came back down into the 60-day cycle low, which then began our next 60-day cycle over here. So in each cycle, what you get is a top and a bottom, a top and a bottom, a top and a bottom. And that helps you in terms of actually swing trading as well as investing. So if we move further back, so this was our previous cycle here, which ended at this low point. The reason why we're doing this is so that we can look forward from this point onwards here for the next few cycles to ascertain when the new bull market will be starting. So if we go left from here, so if we go 60 days from this low, which was the end of that cycle over here, that was the beginning and the end of the previous cycle here. And look at that, right on the button here, and that was 62 days. So in this 62 days, the 30 days came on the 11th of June, and as you can see, we topped out well before the 30 days were over. And that was one of the reasons why we had this massive fall, because it had more days for it to come back down. So it spent a few days going up and a lot more days going down. And that allowed for this capitulation to take place. And that is the reason why when we topped out after 6 days in this cycle, I did fear that we're going to break this 17.5. However, we should always adjust according to what the market is telling us. And the market told us here that there was no appetite to do this over here. And that augurs well for the next cycle. So that's very important for us to understand the cycle that's coming. So these are the last 2 cycles, and we're now in the 3rd cycle here from there. And the question is, what's going to happen here now? What are the cycles telling us? So this current top that we've just had here at 21,000, you can see quite clearly that this is a trend line. And this is exactly where it was going to top off. So this was the end of my swing trade recently. And I'm expecting the market to come back down to the bottom of this trend here, to this support line that we've got since this point there. So we should, by next week, come to the end of this cycle anywhere around the 6th of November. And remember, it's 5 or 6 days either side. So we could have a very quick fall by Monday or Tuesday or Wednesday next week. Or this could be elongated and we may only finish up here. But it's unlikely, because it's more likely with a higher degree of affinity to go towards the support line. So it could be around here. And as you can see, we're coming into the apex of this triangle. If we just extend that, and the next 60-day cycle, let's say we do top out on the 6th of November, the next 60-day cycle should take us to around about the 5th of January. And if I mark that up, that tells us that we're more than likely going to break this symmetrical triangle. And because we didn't do this, despite topping out well before the 30-day midpoint of the 60-day cycle, to me it looks like that this bottom that we're going to have next week will be our last bottom anywhere near this support line. Because what I'm expecting is that when we now move into the next phase of the next cycle, that is going to be our very bottom of this bear market. Now that doesn't mean it has to go below 17,000. So what I would be expecting is, if you mark 30 days from here, turn that into a white line so we can distinguish it. So this 60-day cycle with the white line here being the halfway mark, I suspect, and this is just my narrative, it doesn't have to play out like this of course, but the way I'm seeing the charts, this is what I'm seeing now, is that coming out of this symmetrical triangle, we're going to break it one way or the other. And with our understanding of these cycles, the fact that we topped out well before the 30 days, but we didn't break the 17,000 down here, where it had a great opportunity to do so, it didn't take it. So my narrative, the way I see things panning out, is that we're going to be coming down into this next low here at the end of this cycle. We're going to make a right translated, i.e. the next rally is going to be past the 30-day cycle, this white line here, and it's going to come either to the 22,500 mark over here, or it's going to top out at this point here at 25.5 before we come down to the low of the next cycle. And that low will not be as low as this down here. And then we're going to go off to the races, and this will catch people out because currently everybody's still expecting the market to go down. And I've seen a lot of polls that a lot of YouTubers have done, and a shout out to all of them, and consistently between 70 to 90% of people still think that we're going to go lower than the 17.5, and that's when the market will catch people out, because the next low over here, it could be around this level that we've just topped out at 21, so it won't come back down anymore. So this, to me, the next cycle low, which is in the next 7 to 10 days, will present probably the best opportunity to get in here. So obviously this is not financial advice, this is just my narrative, my perspective of how I see these cycles playing out, the charts playing out, these symmetrical triangles playing out. When I collect all the data in my own head, this is what I see. And this could be completely wrong, so that's why you must do your wider research. I can only give you some sort of an insight that I've got, and I can only pass on my knowledge to you. So just to recap, we're here at the moment, having topped out at 21,000, the current price is 20,100. In the next 5 to 7 to 10 days, we're going to be making into our cycle low around about these levels here, at around about anywhere between 18.5 to 19.5. We're going to bottom out around here and then begin the next 60-day cycle. And I suspect this time we're going to break this downward trend line here that we've got. So this November drop for me gives me a probability possibly of about 70 to 30 as the last drop before the beginning of the next bull market. And that's the reason for the last many videos I've been saying that we should really be holding, and I can only speak for myself, everyone has to do their own due diligence and come to their own decisions because nobody knows the future. For me, it's very important to hold a core holding. This is an area to hold a core holding, and if it does go down to the lower ends, then at least you've still got some money to be able to buy back at a lower level. But the majority, the core holding, is here, and we will then get the benefits of this move to the upside. Now, a lot of people in the comments column also keep talking about all the bad news out there. Well, guess what? All the bad news out there is already reflected in this price. And if all the bad news hasn't crashed the market already, so unless there is a black swan event like a COVID situation, or maybe possibly, let's hope not, a nuclear exchange in Ukraine's war, then unless that kind of thing happens, then all the bad news is already baked into the price. As you also know that the Federal Reserve next week, I think it's the 2nd of November, will be announcing the next rate rise in the USA. Now everybody's expecting a 0.75% rise, i.e. a 75 basis points rise, and that may well be the case. My own hunch is that it's going to be more like a 0.5%, i.e. 50 basis points. And if that's the case, that will mark the turnaround from the last 3 increases of 75 basis points. If it goes down to 50 basis points, then that is a change in the reversal of the strategy from the Fed. And that should spark the markets to the upturn. So let's wait and see what happens next week. And that obviously then bottoms out the end of the cycle for next week here as well. Okay, so we'll leave that there. Now many people have asked me to cover the Bitcoin miners, and I said at the beginning of the video that I'm going to be covering the Bitcoin miners and my view about what's happening with the Bitcoin miners. You may have noticed that I haven't been covering the Bitcoin miners simply because Bitcoin miners are a leverage play on the Bitcoin. So in a bull market, they go up 3, 4, 5 times greater than Bitcoin, but in a bear market, they come down 2, 3, 4 times worse than Bitcoin. To give you an example, just in the last few days, we got this story here. The Bitcoin miner Core Scientific's shares plummet after bankruptcy warning. Most of the miners are running out of money and they are a highly volatile play on the Bitcoin. They are very, very risky. But with risk comes a great opportunity as well. And at this moment in time, I'm really not happy with covering any of the Bitcoin miners simply because of this kind of story. I was expecting something like this to happen. So over the last 9 to 10 months, most of the Bitcoin miners had very big plans to increase the amount of exahash that they were mining. They had all ordered hundreds and thousands of machines while the Bitcoin was going up at the end of last year. But in the last 5 to 6 months, they've all scaled back, which tells you that they were in difficulties because the price of Bitcoin has been going down. So the value of their holdings of Bitcoin that they've mined has also been going down. So if you look at Core Scientific's share price, as Bitcoin topped out here in November 2021, just like Bitcoin, it's been sliding down over the last 9 months or so. And that culminated over here just yesterday, when Core Scientific announced that it may well go bankrupt. And look where the price went, all the way down here. It dropped from around about the 90 cents mark here down to about 22 cents. Now this can happen to any of the Bitcoin miners. However, not all Bitcoin miners were made in the same way. So the biggest ones, the safest ones, I think, in my own opinion, and please remember this is not financial advice, the safest 3 that I've come across are Hut 8, Riot Blockchain, Marathon, and maybe even the 4th one, Bitfarms. So those 4 present a good opportunity simply because they hold a lot of Bitcoin, and while the markets have been coming down like this, they haven't had to sell the number of Bitcoins they've got in custody. So the ones with the highest Bitcoins, and that is Marathon, they've got around about 10,000 Bitcoins in their custody, so they're quite safe. But once we get into the bull market, then we'll know that the Bitcoin miners who have survived will be actually on the way up rather than on the way down. And that'll be a safer way to cover the Bitcoin miners. And I might do separate videos just for the Bitcoin miners because they do present an amazing opportunity, but with an amazing opportunity comes an amazing greater risk. Okay, so we're going to leave it there. I hope you found value in the video, and if you did, then please do remember to like and subscribe and to turn on the notification bell. If you want to leave any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.